The Common Reporting Standard, also called CRS, is an information standard for the automatic exchange of information regarding financial accounts on a global level between tax authorities, which the Organization for Economic Cooperation and Development, also called the OECD, developed in 2014. The purpose was to combat tax evasion. The idea was based on the U.S. Foreign Account Tax Compliance Act, implementation agreements, and its legal basis in the Convention on Mutual Administration Assistance in Tax Matters. Now, over 100 countries have signed an agreement to implement it, with more countries intending to sign later. First reporting occurred actually in 2017, with many of the rest starting in 2018. All right, in this video, I'm going to tell you more on how the CRS works in new countries that you thought were not compliant are now complying with the CRS, but I'm also going to give you a list of countries that have not signed on, and some of them won't probably ever sign on, and then you'll have some that will give in eventually later. And then I'll give you my thoughts on the best ones from there. Also, if you're making at least $150,000 US a year or you've got a net worth of at least 1 million US, and you want to learn more on how to legally get your taxes to zero, how to get a second passport as quick as 2 months, do 3 things. Hit the subscribe button to the right of your screen here, and you'll get new videos automatically as they come out. Number 2 is I'd like to hear from you. If you got a question or comment, just put it below. And number 3 is go to our website, www.citizenshipquickly.com, and ask for some help. All right, now let's look at the history of the CRS and how this actually started. Until 2014, the parties to most treaties for sharing assets, income, and tax information internationally had shared it upon request, but was not actually effective in preventing tax evasion. In May 2014, 47 countries tentatively agreed on a common reporting standard, formerly referred to as the Standard for Automatic Exchange of Financial Account Information, an agreement to share information on residents, assets, and income automatically. Endorsing countries included all 34 OECD countries, as well as Argentina, Brazil, China, Colombia, Costa Rica, India, Indonesia, Latvia, Lithuania, Malaysia, Saudi Arabia, Singapore, and South Africa. Now, in September 2014, the G20 major economies at their meeting in Cairns, Australia, issued a G20 Common Reporting Standard Implementation Plan. The new system was actually intended to transfer all relevant information automatically and systematically. The agreement was informally been referred to as GATCA, G-A-T-C-A. This is the global version of FATCA, but CRS is not just an extension of FATCA. As of October of 2014, 51 countries have signed up to the Multilateral Competent Authority Agreement, which is called the MCAA. And this was to automatically exchange information based on Article 6 of the Convention of Mutual Administration Assistance in Tax Matters. The agreement specifies the details of what information will be exchanged and when, as set out in the standard. Now, as of July 2015, 53 jurisdictions had signed the agreement to automatically exchange information. As of July 2016, 83 jurisdictions had signed the agreement. All EU countries, China, India, Hong Kong, Russia, and 109 countries altogether have agreed to become signatories. Now, yet many countries will not participate in the automatic information exchange. Many of those that have not signed are small countries. In April 2016, shortly after the release of the controversial Panama Papers, Panama adopted the Multilateral Competent Authorities Agreement, also called the MCAA, and signed the MCAA in Paris in January 2018, joining the CRS MCAA as the 98th jurisdiction. Now, in the United States, a different cross-border tax compliance approach is promoted through the Foreign Account Tax Compliance Act, also known as FATCA. The U.S. receives information relating to U.S. citizens' accounts from actually many countries due to the compliance requirements of FATCA. The United States, in many cases, will reciprocate by sharing banking data with countries for accounts which their citizens hold in the U.S., but not automatically as required by the U.S. Now, what I'm going to do is I'm going to show you the countries that have actually jumped in. I'm going to give you the list, and then I'm going to pinpoint actually the ones that have not given in at all. In fact, some of these, your guess is as good as mine, which ones will never give in, and then there are some that will give in over a period of time. But as of right now, and this tape is being done in 2021 in April, these are the ones that on the last recording, this was last pulled off the IRS's website. This was actually done as of, the EU's website. It was actually pulled off as of around February 2021. So, and some of these are projections too that I'm giving you on countries that have said that they're going to actually, comply that have not complied. All right, so let's look at I'm going to go over this list with you and just kind of highlight and give you an idea, how this works. All right, now the jurisdictions undertaking the first exchanges were in 2017. There were 49 countries that complied on this. And then what happened was you had the first about 2 years, you had a bunch that jumped in, and it started just dribbling in from there. And 2018, you had 51 countries. And then it just started kind of going down from there. It jumped actually to, in the year 2018, again, it was 51 countries. Then by 2019, there were only 2 countries, and that was Guyana and Kuwait. And then they had Nigeria, Oman, and Peru that jumped in 2021. And then the rest are actually projections on what they feel like is going to be done in the future. And we're looking at 2022 is Kenya and Morocco. And then countries that people thought were not going to give in now are giving in. In 2023, there were 5 countries that have committed to go in. That's Georgia, Jordan, Montenegro, Thailand, and Uganda. Now, there is a list of people now that have, these are developing countries not asked to commit, and they have not yet set a date for the first year of exchanges. And there's about 45 of these countries. I'm going to, instead of listing all the countries, what I'm going to do is I'm going to tell you the ones, because I'll be honest with you, some of these countries are really war-torn countries. I wouldn't even want to go to the country, much rather set up a bank account there. But I'm going to list these countries, the ones that I think that if I had to, that I'm actually, advising people, if you're going to pick, these would be the ones I would pick out of the 45. And the first one is Armenia. I like this country, Bosnia and Herzegovina. I would pick also Cambodia, although Cambodia is a pretty corrupt country. I still think it's got pretty good banking laws. I would pick also Dominican Republic. Egypt's on here. Now, remember too, a lot of these countries, just because they're listed here doesn't mean that you, not having residency there, can just go and set up a bank account there. A lot of countries will not let you do that. So you have to just, and these laws change constantly. I'm telling you the ones that I think that would be the easiest, probably the best, to if you needed to get residency, it would cost you little to nothing to get residency. Egypt is one of them. El Salvador is another one. Guatemala is another real good one. I would also, Guyana is another one. That's the Guyana that's in South America. I would leave Haiti alone. It's on the list, but I would not, that's one country I just wouldn't care about being around. There's all kinds of civil wars going on down there, a lot of crime and stuff. Honduras is another one. Now, they've got, the crime rate's real bad there in Honduras, but, most of it's drug trafficking and stuff like this. Jamaica is another one on the list. I would also pick Moldova, Mongolia, North Macedonia, which just come out with a new citizenship program. They're in the process of putting it out. Paraguay is another one. Philippines. I would look also at maybe Ukraine. That's pretty much the list. There are other ones on here, but I think I would stay away from them. A lot of them are African countries that are war-torn, and I would just stay away from those countries. But you can pick a lot from that list there. Philippines is very easy to set up residency there. I mean, it's almost, they've shut it down temporarily right now, but once they get back going again. And most people don't realize this too. Philippines has real strict secrecy laws. I think it's actually stronger than Switzerland. You'd be surprised. Most people really don't know Philippines has some of the most secretive banking laws in the world. And most people just don't know it, and they don't take advantage of it. And it's very easy to get residency there. Anyway, if you got a question or comment, just put it below. And also, if you are interested in legally getting your income taxes to zero, how to get a second passport, as quick as 3 months, and you're making at least $150,000 US dollars a year, or you got a net worth at least 1 million US. Hit the subscribe button on the right of your screen. You'll get new videos as they come out automatically. And number 2 is I'd like to hear from you. If you got a question or comment, put it below and I'll get back with you. Number 3 is go to our website, www.citizenshipquickly.com. Hit that top bar that says apply with us, fill out the questions, hit that bottom bar that says send it to us. We'll get back with you. We deal with a lot of citizenship by investment, residency by investment countries all over the world. And I look forward to talking to you on the next video. Take care.